Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special housing report brought to you in association with the BNZ. Today we look at figures from the Real Estate Institute of New Zealand about what's happened to house prices and house volumes in April from March. They show that the median house price fell to $356,000 from $360,500 the previous month. Volumes are also down as well to about 5,200 from around about 6,200 in March and also about the same level a year ago. They're actually well down from the peak of the boom, around about 8,000 to 9,000 between 2004 and 2007. So the market is somewhat depressed, but it's not completely on its knees yet. The key will be what happens in the budget next Thursday. Will the government change the property tax rules and take some of the rental property investors out of the market? Or will we see relatively easy rules through that will get the housing market going again? Also, will we see the official cash rate rise on June the 10th? These are two of the things that many people in the market are waiting for, so the activity is relatively weak. The Real Estate Institute says the market overall is retaining its strength. I, however, think there's a fundamental problem here. House prices are frankly too expensive. And when you look at this chart here, which looks at the median house price over the last 5 or 6 years, you can see that between 2004 and 2007 there was a very sharp rise. House prices are now, in the big cities at least, upwards of 8 to 9 times incomes. That's just off the planet when it comes to housing affordability. And also when you look at what the banks are doing, they aren't lending at the same rate they were during the boom, even though the recovery and the economy is back on its feet. The banks are being restricted by their shareholders in Australia and also by regulators and what's happening in the international markets. They can't get the easy, cheap money they found between 2004 and 2007. And they're charging more for the money that they are lending to people, even though the official cash rate is unchanged. So that's going to depress down on not just supply of credit coming into the market, but also many New Zealanders are wary about borrowing too much in the future. They got a bit of a fright between 2004 and 2007 and how much they borrowed, and now they're pulling back. They're not spending so much, they're not borrowing so much, and they're not pushing so much demand into the housing market. My personal view is that house prices, if anything, will flatten or maybe even fall over the next couple of years. And that's partly because of what might happen in the budget. Until we know what's happening in the budget and when the official cash rate starts rising, we can't be exactly sure what's going to happen. But it's not looking like house prices are going to get anything like back to the upwards track that we saw between 2004 and 2007. That really was an exceptional period, and now we're into the long grind. I'm Bernard Hickey. That was a special housing report brought to you in association with the BNZ.